I think the game plan is financial repression. So they'll fiddle with the official interest rates and just make sure that inflation's a higher rate than interest rates.
Louis, it's a pleasure to have you on today. Thanks for coming on.
Well, it's a real pleasure, Ted. Thanks for inviting me.
So, unfortunately, the central bankers over here in the West don't seem to have taken note of what you've been saying, all the salient warnings about having gold as a reserve asset. I think, in fact, as well, the central banks of both Canada and New Zealand, where you're based, hold absolutely zero gold, which I find to be an absolute travesty for the population of these countries. So I thought perhaps you could start maybe by educating our audience in terms of why having no gold exposure as a central bank is such a fatal error. And then after that, I'd like to get your thoughts maybe on the future of the Canadian economy as it faces what the Fraser Institute is calling the worst decline in 40 years.
You know, the stats are there. Central banks have been accumulating since 2009 at an increasing pace. And it's just the elephant in the room that, unfortunately, my colleagues in the profession won't acknowledge. It's a very important matter, gold, but it's dismissed as buffoonery, basically. Why gold? The funniest, not funniest, most tragic comment I heard from when I was speaking to actuaries back in the day, because I'm retired now, but I'm an actuary, trying to explain to them why they should think about gold as well and their various asset allocations, including for life insurance companies, reserve assets, and explaining to them why gold is money. And one actuary said, "Why gold? Why not orange juice?" You know? So it just it boggles the mind the extent it's deeply entrenched hatred. Almost. I don't know if it's hatred or they don't want to address gold. I think central banks do understand. But why does New Zealand have no gold? I don't know. Although I know who's at the central bank, I don't meet with them anymore. I don't think they have any plans to buy any gold, and it would require quite a change of direction. I think, you know, it's tragic. I do, because it leaves the country quite open to what people will believe is worth having trust in down the track. I mean, at the end of the day, the central bank's role is to maintain the purchasing power of a currency, and you know, they're being judged on that. But it's difficult for people to know how to judge that because they compare a currency with another currency as opposed to with gold. And so they're easily duped by thinking the central bank's doing a good job. If the New Zealand dollar remains around 60 or 50 cents US, then it's a good job.
Yeah, perhaps it's because it's outside of their control. That's perhaps why the private bankers don't like it. A lot of them, maybe technocrats, you could say, they want all the data on everybody. They want it within the system. Perhaps that's a reason.
I think it's mainly that they don't want to give the impression to the citizenry that gold is important. I mean, here's a very simple way of, for me anyway, I like to keep things simple. I mean, if gold was really nothing, and why not allow gold to be a legal tender? And so people who want to transact in gold and do business in gold can do so. And, you know, over time, you know, with laws such as Gresham law and what have you, we'd see how well the currency would do relative to gold. But that's not allowed and it's not permitted. It's an interesting observation that nowhere in the world is gold able to be used as legal tender and at the same time as the local currency, which is the legal tender. So it's I don't know if you're familiar with Professor Fekete, Does that name ring a bell with
Rings a
you?
bell, yeah.
Yeah, he was my mentor for many years. From 2008 until he passed away. Uh, I think I can't remember the exact year, 2018 or so. But he would argue that legal tender laws that were introduced in 1909 in France and Germany shortly before the war were the pieces of legislation that allowed the gold standard to be removed,
Mm.
and therefore not require those countries for citizens to pay extra tax to fund the wars that were coming. So it's quite a claim, but if you look at the history, I think he's got a good point that if we had sound money that couldn't be created out of thin air, we might not have had world wars, and we might not have as much conflict today. At the end of the day, unsound money, unsound relations, unsound transactions, unsound exchanges. Well, anyway, but central banks generally, it's hard to talk about central banks generally because there are some good ones and there are some. New Zealand had an excellent central bank for many years, excellent governors of the central bank, very admirable, in fact, but it's gone downhill quite a lot recently.
Mm. Interesting. Yeah, so we're going to keep the second part of the question as the next segue, which was the future of the Canadian economy. Like I say, Fraser Institute, reputable body, saying Canada's economy is going to face the worst decline in 40 years. And then since 2019, Canada has had the worst growth out of 50 developed countries as well. How on earth do you think the Canadian economy turns around? And like, as somebody who's obviously born there, like, how does Canada leverage its resource base as well? Because that's obviously going to be key to it.
Well, it's a great question. I wish I could answer it intelligently. I haven't been away from Canada I left in '86, so it's been almost 40 years in New Zealand. I have very little understanding of the Canadian economy now, but I know it's very badly governed. That is obvious, especially under the current leadership, Justin Trudeau. Shocking, really. But Canada is typical of a country that has resources, and it is being exploited by the U.S. predominantly, but for their resources. And it's strange that they are still aligned with the West, with the G7. I mean, Canada would never be part of the G7 if it wasn't because of their importance for resources for the US and so forth. But such a small economy relative to the US and others in the G7. But by the way, G7 countries are the most indebted countries in the world.
Right. That's funny. So, yeah, that's totally true.
But I don't think there is an easy solution to move Canada out of its quagmire. And I'm not in a position to make suggestions, but a return to sound money would be a good start.
Absolutely.
But I can't see it happening. Good luck to Maxime Bernier, by the way, who was pushing for that. But obviously, it's too much to take in for the citizenry as a change to make to see that. So that's why I think the world will be subjected to whatever the BRICS decide in due course, and things will follow from there. Countries like Canada, New Zealand, very similar, as just a passenger on the sinking ship of the West.
Interesting, yeah. Okay, so let's shift from Canada across the border to the US. more specifically, there's this kind of consensus forming at the moment amongst experts that the US is kind of reaching its end of empire moment, akin to the fall of the Roman Empire and all the ones that came after it. One of the parallels that I've noticed between the two empires, the Roman and the US one, is this relentless debasement of currency as a means of financing war efforts. So I was curious to know, are you observing any other parallels from fallen empires of the past that would suggest the US is experiencing its end of empire moment?
Well, there's no question about it, but it's a very long-winded fall or end or collapse of, and it's not going to end peacefully, I doubt, fortunately, because the US really wants to maintain its hegemony. And that's the real problem in the world. I mean, that's why BRICS began back in how they dealt with the crisis in 2008. I remember very well the IMF meetings in Washington and China and others just leaving and saying we need to start working on an alternative to all this, because it's never gonna play in our favor. And so it's been 15 years now that they've been advancing something of an architecture that will, if not replace, enable them to transact and do business and trade and without using the dollar. But the key problem is hegemony, and the US absolutely wants to maintain hegemony, and that is why we have conflicts like we see in Ukraine, because you can't maintain hegemony if Russia remains strong and big as it is. I mean, think about it. It must be devastating for the neocons to contemplate that a country with, 8 or 9 time zones can be is bigger than they are. I don't know. It's I think it's inevitable. History shows that a global reserve currency always gets replaced by another global reserve currency. What will that new global reserve currency be? And it may not be in the immediate a reserve currency, or might be more a settlement currency that becomes an alternative to the US dollar in the first place, because that's more important for trade. And we'll have to wait and see what comes out of the next meeting of the BRICS when they meet in Russia in October. Maybe nothing. These things take time, and but I think the US dollar, is unlikely to die soon. It remains a fiat currency, and there's still all kinds of tricks that they can pull, including a return to they could execute a return to the gold standard with their reserves.
Real quick break here, guys. If you are a mining investor, you are without question familiar with the Golden Triangle region in British Columbia. This is one of the most prolific mining regions in the world due to its vast deposits of gold, silver, and copper. Now, for the last 4 years, Dolly Varden Silver has been busy expanding their high-grade silver deposit in the Triangle, and they are backed by some of the smartest investors in the silver business, including the legendary Eric Sprott, Hecla Mining, US Global Investors, Fidelity, Delbrook Capital, Sprott Resource Corp, and more. If you are curious why the smartest money in the silver business is cozying up to Dolly Varden Silver, then hit the link beneath this video.
Assuming they're not compromised and still all there, as they say, the 8,000 or so tons. They have the means to, Nixon did say when he unilaterally announced to the world that they were defaulting on their obligation, he didn't use those words, but it was going to be temporary. And so they could do a trick, what do you call it, magical trick, and make it reappear out of the blue one night during a television program that they interrupt again.
Yeah, that'd be very ironic after all these years.
Yeah, so I think, the decline is inevitable, but won't happen without, chaos or serious fight. Just look at the political situation in the U.S. at the moment.
Yeah, yeah, absolutely. And it tends to be the case whether the US would implement a gold currency or not, the fallen empire, whether it's the Roman Empire, the Byzantine, or the Ottoman Empire, they all find their way back to gold in some shape or form. And it has been the constant thread throughout history. It's a great way to view monetary history, as I'm sure you'll agree. You touched on the US dollar there. And obviously there's an event coming up in September on the 18th that's going to be really crucial to the strength of the US dollar. I'm talking about the Fed rate decision, of course. Powell did his best Paul Volcker impression back in 2022 when he was hiking rates really aggressively in a very short space of time. And now today we're in a position where Powell's just, made a lot of comments at Jackson Hole suggesting that he's basically ready to go. He's ready to embark on a rate cutting cycle. So I was wondering if you could draw on your years of wisdom watching rate cutting cycles and maybe tell us where you think gold, silver, and the US dollar would be headed and in 2025, and any sort of concrete price projections would be appreciated.
You all want me to do some price projections?
If you could.
Well, Powell and another 25 basis cut or 50 basis points won't make much difference to the system, the financial system. It's very fragile. But I find it interesting, all the attention given to the Fed and their cuts and their meetings and the words and all this. It's like a cult,
Fed speak, yeah.
I'm not a member of the cult. I don't, but I do believe that it's going to have an impact for sure, and that they're probably trying to avoid a share market correction or one way or another, but they can't. I mean, I liked Jim Rickard's analogy years back when he mentioned what central banks are doing with their interest rate shenanigans. It's like using a thermostat, change the temperature, 1 degree or 2 degree, one way or the other, when really the system is a complex system. And at the end of the day, it's more like nothing happens until you reach a critical point, and at that point, everything collapses. So, fiddling around with the thermostat with basis points here and basis points there keeps everyone animated and invested. And that's the name of the game, make sure that everybody in the industry keeps investing in the system. But, the problem is the system. The system is at risk. And this systemic risk is something everybody ignores because they're all in one way or another, whether it's in money at the bank because they don't want to, take more risk in share market or whatever. It's good luck to Powell. He's only made decisions at the wrong time in the past, so it won't be any different now. And I don't think he'll prevent the U.S. from going into a recession, but maybe he'll prevent the markets from collapsing.
Yeah, and I agree with you. It's almost like the Fed is like in a checkmate position. If it was playing chess, it's just moving the pawns around. It's already stuck between a rock and a hard place. Whatever it does, you've either got a recession or the return of inflation, in my view. So it's an
At the
unfortunate
end of the
situation.
day, Ted, they haven't vanquished inflation, and they're the first ones to even admit it in the same breath.
Yeah.
But yet they cut interest rates.
Do you expect that it'll be more than one that will get kind of rate cuts going into 2025? And obviously that's going to potentially weaken the dollar and cause people to flock to gold and silver?
I think the game plan is financial repression. And so, and as a result, I'm 100% on board with Russell Napier on that. And financial repression for decades, you know. So they'll fiddle with the official interest rates and just make sure that inflation's a higher rate than interest rates. It helps them with servicing debt, addressing the debt. The debt will continue to go up. Even the official bureau, can't remember what it's called in the US, is projecting deficits and fiscal deficits in the US of, on average, about $2 trillion a year for the next 10 years. So, you know, what's
Talk to me about that. Talk to me about the sort of the debt trajectory, and I think it was the Mike Maloney Secrets of Money series that I always swear by in terms of educating people on this, and the football stadium filling up with water, and it really gets exponential, doesn't it, towards the end, where the debt that's incurred I mean, you're an actuary, so you would know. Maybe talk to us about where you see the debt ceiling situation being resolved. Do you think it'll ever be resolved?
Well, the ultimate extinguisher of debt is gold.
Yeah, I like that.
So you know, but when, who knows? But it's that's a truth. That's a fact. And countless monetary scientists or economists or historians attest to that fact. How it will play out is anyone's guess. I mean, I remember making so many presentations to CFA charter holders around the world, 24 or more countries, you know, including Pakistan, Sri Lanka, Czech Republic, you know, what have you, Korea, South Korea. Anyway, I wasn't invited to North Korea, but and listening attentively on the subject, but not moving 1 inch away from there, because you know it's a herd. Everybody does the same thing and stay close to each other, and nobody knows anything about gold in the industry because they're not taught gold at university nor on the CFA program. So why bother? I mean, that's not their job. Their job is to invest the money, and you know, that's what they do. And so if you buy gold, it's not an investment. It's, what do? You just buy it and hoard it. You just look at it. You just forget about it. Yes, that's what it is.
Well, it is money in that sense, isn't it? I think, what did you say? You spend it. You said you spend it, not save it, or something along those lines. I can't remember.
Yeah. Money is gold is money. You don't sell it.
Yeah, that's it.
People do trade it, but you spend it as money in due course. Not now, because you'd be a fool to spend your gold as money when the paper money is better money to spend.
Interesting. So we're going to switch now. We're going to talk about. We're going to jump across the pond to Europe, where there seems to be this kind of a new encroachment upon freedom every week almost. Most recently, we saw Pavel Durov, the Russian-born CEO of Telegram, the social media platform, arrested by French police, which was crazy. And then a few weeks prior to that, we had the European Commission send a letter to Elon Musk on the basis of misinformation that he may release when talking to Donald Trump. So let me know if I'm being hyperbolic, but do you think that Europe is embarking on the trajectory towards totalitarianism? And I guess this follow-up to that in the crossover of money would be, how likely do you think the appetite for control amongst these maybe what you would call technocrats in the EU, how likely do you think it will spill over in terms of like a CBDC and implementing one?
Yeah, it's pretty awful to see censorship, which is really what it is, taking over the West, or the West taking over freedom of speech. Soon we might have freedom of assembly taken over, and all they need is another pandemic for that to happen in theory. So it's mind-boggling, all this. It really is. I was in Europe with my wife earlier this year. We traveled for 6 months and went to Italy, went to France. We're 2 weeks in Paris, and we're shocked to see the level of security. That was before the Olympics. It was in February or March in Paris. Gendarmes everywhere, fully armed with, seemed like Kalashnikovs, long guns, just walking on the side of the street, I guess making sure nothing happens. But, it was very strange. So, but France, we saw what happened with their elections.
Yeah.
Unfortunately, it's not a democracy anymore. It's just a pretend democracy, like many. The U.S. is, look at what is happening with the election, how they couped Biden.
Yeah.
Even though it's been obvious for 4 years that he's losing his mind or had lost his mind. Oh, because of the debate, it was now obvious to everyone. Oh, come on. And his VP is now the nominee for the Democrats.
Who nobody elected.
Without any single vote, without any interview, without any... Hello? And it's the model of democracy in the world. So crazy things going on. So to see this Telegram CEO being arrested in France and Kim Duncombe here in New Zealand is being requested for what do you say to send him to the US, and the current government has accepted that they should be doing that. Well, he's going to defend himself, but. So these people that have allowed us to communicate are all being attacked, arrested, about to be arrested. So it's not looking good, Ted. It's not looking good at all. I would recommend everyone to buy more gold.
This is it. This is the conclusion that I came to when I chose to educate myself. We mentioned universities as well. We mentioned... that's actually something I want to touch on, just briefly go off script, and, modern monetary theory and all these different schools, Keynesian economics. That was what was lectured to me at university. And it's only if you really go off the beaten track and actually provide yourself with alternative perspectives that you make a decision. Like people like Thomas Sowell, great economists like that, they're not on the curriculum. And I wonder... I don't know. Was that your experience when you went to university? Was it the same even then?
Oh, I so enjoyed that question. Thank you, Ted. Look, everything I know about gold, I learned after I left Mercer. I was CEO of Mercer in New Zealand for a number of years. And I decided I had enough. I left in 2004. So I retired at 49 from the working force. But I knew nothing about gold because they don't teach you about gold at the CFA program. And I went to university, you'll enjoy this, in the 70s. So I was there from 73 to 76. And that was after Nixon's default. And I was studying economics, actuarial science, but including economics and law. And not a word of that was mentioned ever. It had just happened. Bretton Woods had collapsed. No, what we were told was how the banking system works and how, these lovely charts of supply and demand that have nothing to do with human action. But I was absolutely flabbergasted when I discovered what happened, like in 2005. And I started reading, and I bought so many books that were published in the 50s and 60s from Jacques Rueff, financial advisor to Charles de Gaulle, who eventually tell de Gaulle, send the ships to New York and collect the gold. They were the last nation to do it before Nixon altered. And so all this, just got me all disturbed about the system and everything. And I got passionate about, like you are now, and I hope you remain passionate and keep that energy and that enthusiasm. But
I will.
But for years, I tried to educate and convince colleagues that, look, this is what happened, and what we have is unsound money. Why don't we have sound money? Why don't you want sound money to return? And so, the same thing happened to me in the sense that I wasn't taught any of the truth, any of what had happened, nor what the history was. I was taught what they want you to learn about the system. And the problem is the system. And that's why I view bullion as protection from systemic risk. How do you protect yourself from systemic risk? Is by not being in the system all in. The analogy for me is a casino, Investments are all made in markets that are increasingly looking like gambling casinos because of so much artificial or layers of derivatives. That are in some cases quite opaque and not all regulated. Most of it isn't, and so the system is teetering on the brink. So what are you going to do? You still want to be all in? All your chips on the casino table? No. So you put some chips away, and that's bullion, and that's why I don't know if you want to talk about portfolio management later on.
Absolutely, Louis. Yeah, I just wanted to jump in. You touched on something that was so important there. Like our mutual friend, I think Ronnie Stoffler, the letter that I wrote to him when I was experiencing all these insights and these eureka moments that we seem to have both shared. I called it the illusion of diversification, and that's what the illusion that the investment advisors of today, 99% of them have. They believe that they're actually diversified amongst just a stock bond portfolio. And the reality is completely different. They're actually exposed to all the counterparty risks of the banking system, whether that's the derivatives bubble, whether that's the debt bubble. It's unbelievable. And yet everybody's still in it. And I think one of the things that you recommend, and you can correct me if I'm wrong, is at least a 20% physical gold allocation. That's what you recommend to your clients. Where's the grounding for that 20%? I'm assuming there's like a lot of analysis that you've done to get to that point. And also, as an extension, what's the other 80%? Is it stocks and bonds, and what does that comprise?
Well, actually, there's no great optimal analysis for the 20%. The 20% is just the good old 80-20 rule.
Right. Okay.
Because at the end of the day, you can analyze and optimize, maximize your return for the same risk or minimize the risk for the highest return, and create an efficient frontier with different tolerance levels of. That's all the pseudo science that it is mathematical. And it's interesting, it's fun. I did it for so many years for clients, and it's great, because it protects you from the advice you give to clients as it makes sense. It's robust. But at the end of the day, it's you can't put gold bullion in there because it's not an investment. So when I see everyone talking about, the industry has less than 1% allocation to gold, and maybe that's well, I don't believe gold should be part of that portfolio. Gold is a separate portfolio. Bullion is bullion, and then it doesn't cloud your mind. If you want to invest and be in the system, then you continue to play per the rules with stocks and bonds and whatever else you want, and you have a portfolio allocation that doesn't include your bullion. Bullion is outside. Sure, you monitor. It's good practice to monitor. It's whether it's useful or performing, or whether you should adjust that allocation over time. But you shouldn't see it as part of your investment portfolio. It's not an investment. It's money put outside the system, awaiting future deployment. When the time comes that cash is really king, and the best cash will absolutely be king. So that's bullion. So why 20%? It's a start. Now, here's the thing. My clients now have far more than 20% because they're reluctant to maintain that allocation, the good old practice of back to benchmark, if 20% is the benchmark, bring it back to 20%. Once it goes up too high, sell a bit, sell down, and if it's too low, buy more. And it's good. It's CFA, stop, practice, best practice. But they don't want to sell it down. And they ask me, what do you think the price is going to collapse? Is that it? Or is it going to continue in its trajectory? And I said, well, it's going to continue in its trajectory, not a straight line, but, if you're a long-term holder and you understand why you have bullion to eventually use it as money when it is good money, it's recognized as money, and that's when you can spend it, then, so if you have it as part of your portfolio, you're going to be forced into selling it, because it's going to take over your portfolio. So you put it outside, you have that there, and you just watch it. Okay, and basically that's why investment advisors or fund managers hate gold, because there's nothing to do, there's nothing to manage. Where would you pay them to manage, bullion? Because there's nothing to do. Once you have it, you have it. You pay. Okay, there's storage fees, insurance, and all of this, and that all needs to be done properly, and that's on another subject, that we can talk a lot about, because most people don't know anything about that. But I think it's an error to include gold as part of the portfolio. That's not how you should see it. But it is cash, and that's what the industry will do. Once they start thinking gold might be a good idea, that's what they'll do. But they'll never buy the metal. They'll buy GLD, or they'll buy futures contracts, or whatever is it, gold mining shares. But I can't picture investment advisors saying to their clients, yeah, I think you should have some bullion. But maybe that will happen, and we'll see. If the shit hits the fan and the world really goes to
well, Louis, what I will say is sorry to interrupt, that if they fail to do so, they're failing their fiduciary obligation ultimately, and also it's going to bite them back in the neck when clients come knocking on the door saying, listen, you're meant to be a financial advisor. The gold price has outperformed the bonds and the stocks that you've recommended that I allocate my funds to. Why didn't you tell me to put my money into gold? And silver we could add to that as well, potentially going forward. I think so, certainly. So it's in their interest to do so. And I'm sure we're in agreement.
Absolutely, but they don't want to be the first.
Yeah, that's true. Okay, so we're reframing it. So gold is in its own portfolio completely. Yeah. It's not even in a portfolio, it just is money. Okay, and then within this 100% casino, allocation. That's what I'm trying to get to the bottom of, is like,
Okay.
are you recommending an allocation into bonds, into stocks? I mean, for example, Ronnie, our friend, in the most recent In Gold We Trust report, recommends a 10% allocation to performance gold, which is the likes of mining stocks, and then a 5% allocation to Bitcoin as part of what is the new playbook, they call it. What are your thoughts on in terms of that allocation?
Yeah. Well, good question. It'll be predominantly equities. It'll be predominantly equities, but more in the emerging markets than in the US. And it'll be nothing will be passive. It'll be based on selected excellent fund managers that value driven or growth driven, but good at picking the right companies over time and have tremendous records. So it's not something I do for clients, but having research fund managers for decades, I know a few that remain excellent, and clients will be using them for the bulk of their investment portfolio. But there will be some dedicated allocations as well to resources, global natural resources, so commodities, or commodity manufacturing or producing firms. So I think it's a very important sector. I think, those countries that have the raw materials in their ground or above ground have been exploited for so long, and those days are coming to an end with BRICS gathering together to be able to trade more easily and not be subject to the dollar system. So we'll see what will happen. But I think the days of having cheap raw materials or commodities of all sorts, whether that's oil or copper or whatever you want to think of, are near over. And that in itself is going to feed inflation tremendously. So other allocations, a bit of private equity, but not much. A bit of gold. I like to have 10% in speculation. So call it speculative investments. I'll go mining in that, and we'll have digital assets in that as well. So not just Bitcoin necessarily, but Bitcoin exposure through various means, and companies that operate in the digital space that manage funds in that space or that mine, or there's a whole variety of activity in that sector that is worth investing in. And so there will be a few layers of those. Infrastructure is another one. But as far as defensive assets, because we've got the bullion outside, we'll have some cash, and we'll have some credit. We'll have some, not so much sovereign debt. I think that's a terrible thing. It's like voting; it just encourages them, to fund their debt. So no sovereign debt of any country, but credit and corporate, credit. And so we employ, again, good fund managers in that space. And so there will be an allocation, a 10-15% allocation to that.
Okay. Any real estate as well?
No real estate.
Okay.
Generally speaking, my clients are in Australasia. And generally people are overly exposed to real estate already. So sure, there could be, commercial real estate as an asset class, but that whole sector is in deep trouble. So maybe later, but certainly not now.
Okay. Yeah. So would you agree with Ronnie's 5% Bitcoin?
I think it's interesting, but I would say to Ronnie, he's a good friend. I had lunch with Ronnie in Vienna when we were traveling by. I think it was May or thereabouts. It was very nice to see him again. I invited Ronnie to New Zealand once, and he gave us a great presentation, and he circulated in the room Philharmonic.
Yes.
And I told him at the end, I said, you took a big chance there that nobody would run away with it. But I think I would tell Ronnie, you shouldn't put gold in there. You should, put it outside, but have a bigger exposure. But I think
Yeah.
he's trying to please to the whole industry, and that's the way to go. I like his idea. I like it. It's a better 60-40 than I think even the converted CFA charter holders of the world are beginning to wonder whether 60-40 is such a great idea.
Absolutely. Well, the performance certainly speaks for itself relative to something like gold at the moment. I do want to finish off with a question about New Zealand, because obviously that's where you've been based for a few years now. It's actually from a podcast with Joe Rogan. Asked Peter Thiel, who's the billionaire who co-founded PayPal, if you left the US, where would you go? And Peter said, maybe I stay in California, but maybe I go to New Zealand. And there's been talk of him having a bunker there, and he's kind of umming and ahhing about whether he should go there. I mean, at the moment, I'm looking around for places myself, and I know a lot of people are, where freedom has the best chance of being upheld. Argentina is one of the ones we spoke about on the show before. But is New Zealand something in terms of politics, economic policies, and just general civil liberties? Is it kind of infected by the same disease that Europe and the US and Canada is, or is it more suited to a libertarian?
Well, I don't know if I should answer that question, Ted.
Okay.
Well, let's just say that it's not the country I moved to in '86 anymore.
Right.
And everything changed under the previous prime minister, who now understand lectures at Harvard.
Right.
Says a lot about U.S. universities, or any universities, unfortunately now. But she destroyed the country very rapidly. And it's very difficult to undo what has been done. And I'm not even sure that it is even possible. It appeared to be the case when the government changed with the current government, but I'm not convinced that New Zealand is such a great place as it once was. But it's a wonderful country. It's beautiful where I am. It's just so near the beach. It's hardly nobody here in New Zealand. Maybe I think they tell me it's 5 million now. It was 3 million when I arrived, but you can hardly see the difference. You can travel for hours and not see anyone.
Yeah.
Depending on where you are. Auckland's pretending to be a big city, but it's got so much problem and infrastructure issues. But politically, I mean, even the central bank is not what it used to be. I don't know. I once was more active in advocating for better government, advocating for better everything. I was, as I founded the CFA Society here in 2000 and was its director for a few years and remained on the board for 10 years. And during those years, I was, in contact with regulators and what have you. But I've given up, because none of the, I'm at that stage where it's over to others to try and make it better or back to what it was. But people like Peter Thiel love New Zealand, of course. And I would be surprised if Peter had already, I wouldn't call it a bunker, but probably a palace somewhere on a hill that he can go to in his private jet and helicopter, as many billionaires do in New Zealand have hideouts. And they're welcome here by the government and everybody else, it would seem. And that's fair enough. Good on them. They've got the means, and New Zealand is perfect for that. But for the average citizen, depending on what how the country is ruled or governed in the future, might not be the same experience as what Peter Thiel's experience will be in New Zealand. So I rest my judgment on that. I don't know. I try to remain positive, but I'm able to leave at any time I want, so I'm not, glued or married to New Zealand, although I've been here now more than I have in Canada. I'm turning 70 next year. So I've had 40 years almost here, is more than half my lifetime. So children were born here. One is still here. The other one is in Chicago. So, the world is my oyster. But as I also wonder where is a good place to live that respects freedom and freedom in all aspects. And I don't know any. No country comes to mind that is clear cut a country I would live in, and that, because any country can change too, become a dictatorship or whatever. The smaller it is, the more on the geopolitical or geographic map it might be to some other interests that might turn. So freedom is in your mind to some extent, and you can. I try to be a sovereign individual as much as I can, and watch the craziness of the world from the sidelines. But I have that a bit more luxury at my age than you do. You're younger and you have that longer period of time ahead of you. And I think that's not a bad thing, but you need to get involved and try and make it better more than I do. Although, when I look at people like you, so energized like I was, I might get off my bum and get back into action and try and rattle the cage a bit. I used to love doing that. But,
absolutely, and we welcome you back on the show to definitely fight for that freedom. And gold and silver, of course, is the main embodiment of that. So that's what ultimately aligns us. So I think that'd be a great place to end it, Louis. It's been a pleasure having you on. Before we go, do you just want to outline maybe where we can find your links? You mentioned you had a website. You also post on LinkedIn quite a lot as well.
LinkedIn is the only social media I've used. I've never spent a second even on Facebook or Twitter, for that matter, or X.
Right.
I think I would be bogged down too much. But LinkedIn is okay, and I enjoy it. And as long as they let me post what I want to post. During COVID, that wasn't the case, like many others. So we'll see what happens, how good they remain or not. But there's my website is lbnow.co.nz. And LB now stands for Louis Belanger Now, but I think I'm going to change the name of my company for Long Bullion Now.
Yes, I noticed that. I like that. Double entendre.
It's on the way.
Perfect. Right, Louis, thank you for coming on. We'll put all those links in the description. Thank you for watching at home. We'll be back next week on the VRIC Media channel.
Thank you, Ted, and all the best to you.